Hello everyone, it's Wednesday, April 15, and today we will review the charts for the euro and the British pound to identify potential market trends. Both the euro and the British pound have extended their gains against the US dollar, driven by easing geopolitical tensions and a de-escalation of the US-Iran conflict. Reports of successful talks between Israel and Lebanon yesterday have added to market optimism, prompting traders to open long positions on risky assets. In addition, the US and Iran announced they are aiming to arrange a second round of negotiations in the near term. However, tensions surrounding the Strait of Hormuz continue to fuel the global energy crisis, while the prospect of renewed negotiations weighed on the US dollar, dampening its demand. Washington remains firm on its blockade of the strait, intended to limit Iranian oil transit. Meanwhile, Tehran is taking a cautious approach to avoid escalating the situation ahead of the upcoming talks. On the macroeconomic front, traders received data on US producer prices yesterday. The index rose by just 0.5% in March, significantly below the consensus estimate of 1.2%. On the year-over-year basis, producer prices increased by 4% compared to an expected 4.6%. Core producer prices unexpectedly showed moderate growth in March, falling well short of the figures from February. Now let's take a look at today's macroeconomic calendar. It features important data on French consumer prices and Eurozone industrial production, along with a scheduled speech by ECB President Christine Lagarde. In her statement yesterday at the International Monetary Fund meeting, Lagarde highlighted the risk to the global economy posed by the energy crisis, noting that the conflict in Iran presents a significant threat to the European economy. She also emphasized the need to closely monitor further developments and shifts in inflation. Later today, US economic data will come into focus, including the manufacturing index and the housing market index. Several Federal Reserve officials, including Mitchell Barr and Michelle Bowman, will also deliver speeches. It will be interesting to see what insights they provide, especially regarding the situation in the Middle East, which is likely to be a key topic of discussion. Turning to technical analysis, the 1-hour EUR USD chart indicates that a decline followed by a false breakout at 1.1782 would generate a buy signal, potentially pushing the price up to 1810. A break in consolidation above this level would pave the way for a continued rally to 1.1839 with a further target of 1.1866. At this level, I would recommend considering short positions on a rebound targeting a move of 25-30 pips. Short positions at 1810 and 1839 should be considered after a false breakout. In a bearish scenario, if the price breaks and holds below 1782, the euro could decline to 1757. If geopolitical tensions escalate, weakness might extend to 1.1722. At this level, it would be wise to consider going long on a rebound, aiming for an intraday correction of 30-35 pips. Speaking of the British pound, the trading setup is similar. It would be prudent to consider short entries on a false breakout at 1.3583 or 3607. However, traders should exercise caution where going short in this bullish trend. Short positions on a rebound would be relevant at 1.3632, targeting a 20-25 pip move. On the bullish side, long entries could be considered on the false breakout at 35.45. where buying interest may increase, or at 1.3511. Going long on a rebound would be appropriate around 34.82 and 34.50, aiming for an intraday correction of 25-30 pips. Best of luck to everyone.